In this week's episode of the Stockscores Market Minutes, we'll talk about parabolic upward trends, what they are, and how to trade them. I'll do my regular weekly market analysis. We'll do a market scan in search of opportunity and look at the trade of the week on SNCA. All right, so what is a parabolic upward trend? Well, an upward trend is where we are going up from left to right on a chart, meaning that price is going up consistently over time. A parabolic upward trend occurs when the trend gets steeper and steeper over time, causing it to curve up and away from the trend line. Now, this is typically caused by emotional trading. You have some investors who are buying with the fear of missing out. They don't want to miss out on the next big day to the upside, and so they chase the stock higher. You also have a situation where short sellers who look at the fundamentals of the business and say, this doesn't make any sense, well, they start short selling the stock, but before the upward trend is broken. Essentially, they are getting in front of a moving freight train. And the result is that they often get caught offside on the trade and have to cover their shorts at any price. And so it becomes a situation where the buying is just so strong that it pushes price ridiculously higher. Now, the key thing to understand is that this is often the final push before a correction in the stock, because price goes up on emotion, not because the fundamentals make sense. Ultimately, stocks that run away from their trend line almost always come back to the trend line. Okay, so let's take a look at the chart of Ballard Power, which has been on a real tear and has gone into a parabolic upward trend. You can see the linear trend, something like that. Draw a straight line across the tops and the bottoms. I've got an upward sloping channel. And then the trend starts to get steeper and steeper. And so we now have this parabolic upward trend line. And even if I drew a linear trend like that, you can see that I'm still far above the upward trend line. Now, parabolic trends are fantastic for making money because they just go up beyond reason. However, it's really important that you dance close to the exit door because they will typically correct, and often quite violently so, once the trend is broken. So when the trend gets going really steep like this, what I watch for is a break of the trend line. Now, in this case, because the trend is so steep on the daily chart, you actually want to watch something like the 30-minute chart to see if that market breakdown occurs. And when it does, sell that stock. And if it breaks down from a falling top, you can actually look at short selling the stock with the idea or the expectation that it will come back down to that upward trend line. So again, when trends go parabolic, don't fight it. Wait for the trend to be broken and then be a seller. And if there's a breakdown from a falling top, a break of a trend line from a falling top, then think about short selling the stock. Okay, let's get into this week's market analysis, starting us off with the US markets. And we've got a great market right now, nice strong upward trend. You can see here the S&P 500 is in a linear upward trend. And so even though it feels like the market's kind of crazy, we haven't gone parabolic yet. And that means that although it doesn't feel like it, it's actually still not that emotional. Looking at the longer term chart, here we can start to see a little bit of a parabolic situation from the very long term trend line, which is something like this. And we had that upward sloping channel and we've broken up through that. We, however, on this weekly chart here, we're still in a fairly linear trend line at that point. I would say we're getting a little overbought, a little bit extended from the trend line, but you know, I've seen this before. Markets will go up beyond reason sometimes, so don't fight it. Don't think, oh, it doesn't make any sense that the market is up this high. It doesn't matter what you think. The market does not care. What matters is that as long as this trend is in place, you have to trade with it. Don't fight the trend. I see it all the time. People think, oh, I'm going to be smart. This doesn't make sense that Apple is this high or that Tesla is this high. And so they short these stocks, getting in front of a freight train of an upward trend line. Until the trend is broken, stick with it. IWM, pretty good week last week. Coming into the longer term resistance, we had lots of good runners in the small cap space, and I think that will continue for another week or two as we rally into that long-term resistance from the September, August 2018 highs. So I would stick with this. I'm bullish on the small cap stocks. Looking at the Canadian markets, we have a nice, strong, linear trend to the upside. So got to be bullish short term, and longer term, we're breaking out. You know, we originally broke out back here. I got bullish there, and then we broke the flag there. That's bullish, and now we're breaking out of this little ascending triangle. That is bullish. It looks to me like the Canadian market should continue higher, and until the trend line is broken, I will remain bullish. TSX Venture, really not the place to be. There's a little bit of strength coming into cannabis. We'll look at that in a moment. So there's some life coming back here, but it's far from a strong market. And so I think you have to be pretty selective about what you trade on the TSX Venture. On to currencies, and of course the US dollar we always take a look at. You can see that the upward trend line was broken from a falling top. That's what I talked about at the top of the video. And so we're now dealing with the breakdown, getting a little bit of perhaps a sucker rally on the US dollar. I would worry that it'll come to that downward trend line and get stuck, roll over, and continue lower. So I remain somewhat bearish on the US dollar, which makes it easier to be a bull on the Canadian dollar. You can see that we've got this ascending triangle pattern building. What that means is optimism is building. Every time there's weakness, it's not as weak as it was before. And that's why we get rising bottoms on the chart. And that is a sign that the buyers are taking control of the Canadian dollar. And I don't think it's exceptionally strong yet. We really haven't had a decisive breakout. We still have a lot of pessimism and resistance to work through, but it's looking better for the Canadian dollar. On to interest rates. TLT is the ETF or ETN I like to look at. And it's essentially in this quiet sideways trading pattern, which means interest rates are stable. Until we break out of this pattern, I wouldn't get too bullish or bearish one way or the other. Commodities, always like to take a look at gold. Gold has had a pretty good rally on political concerns. Last week it gave us a bit of a signal that it was going to pull back because it closed below its open after running pretty strong for a few weeks. However, there wasn't much weakness in the last week, and perhaps we're going to stay stable here. I wouldn't get too enthusiastic about chasing gold stocks higher, but if there is a good chart pattern set up on a gold stock, I think it has the support of the underlying commodity, and that can help it go higher. Oil, of course, had that fairly strong pullback 2 weeks ago after some tensions in the Middle East were resolved. We still have the potential for a good oil market. We've got rising bottoms building. We broke out of this pennant. Now the question is, can we break through this horizontal resistance? I think oil is going to be steady. I don't really see a strong reason to buy it, but I also think that the selling is probably overdone. And there's a lot of these oil stocks that have really been pummeled to the downside, and they're starting to make comebacks. So I think that there's some opportunity to bottom fish some of the beat up energy names, especially in Canada, as we start to see some momentum gather with pipelines getting approved. On to fear. Well, fear is at a low. Perhaps we could call this complacency, but I see no reason to, jump out of the bull market yet because there's just no sign of weakness yet. And until there is, I got to remain a bull, even if it doesn't make sense. So my outlook then is bullish on both time frames for US and Canadian stocks. Gold bullish bullish long-term, neutral short-term, and oil neutral long-term and bearish short-term. My comments didn't seem to make it across, but I'll tell you what I think. The upward trend basically continues. Some would say it doesn't make any sense. Some would say you should be shorting this market. I would not do that at all. Until this trend is broken, just continue to believe, continue to be a buyer, and cautiously so, I would say. Dance close to the exit door, but stocks are strong, and so why fight the trend? On gold, yeah, it's probably going to calm down a little bit. Oil starting to base, and as I said earlier, there's really no fear in the market yet, but keep an eye very closely on the market because it could turn very quickly given how generally optimistic investors are. They're all on one side of the boat, and if we get a break of that trend line, we could get a significant correction or pullback. All right, so let's go on to the Stockscores market scan now. I'd like to run this for you more as a demonstration of how the tool works. What we're going to do is build our own scan this week. So we're going to jump over to the Stockscores market scan tool. We'll build a little scan in search of opportunity. What I like to show people is that there's all these different filters here. And if you are a member of Stockscores, you have access to this tool. So let's build a little scan on the Canadian market because it's been particularly strong the last little bit. So I'm going to look at all Canadian stocks that are, well, let's say above $5. You can just see the flexibility of the tool here, that have gained at least 5% in the last 10 trading days. And I want liquid stocks, so let's say they have to trade at least 1,000 times a day, which for Canada is fairly liquid. And I think that's about it. Let's run the market scan, see what it finds us. Really what I'm trying to do is look for stocks that are showing some strength and then inspect their chart patterns to see if there's some potential there. So we found 53, or the tool found 53 stocks. My job is to now cycle through these charts. Now I've got my default chart set to a 3-year weekly chart. I'm looking for that long-term pattern setup indicating that something good is happening. And what I'm looking for are stocks that have surprised to the upside from previously low volatility trading. I'm going to be fairly selective. You can see I've gone through 10 quite quickly. Didn't really like any of those, so we'll go on to the next page. With each chart, I'm just looking for patterns. And so here's one that's somewhat interesting. Sorry, I said this was a weekly chart. It's actually a daily chart. And here you've got a stock that's been in a downward trend line, has based at this $8 level a number of times. You can see it just keeps hitting it and holding. And this past week, we've broken that downward trend line. And I also like that the volume is starting to improve. You can see the stock scores are starting to move higher. I like this. It's a cannabis name, and we're going to see a few of these, I think, as we go through here. But CRON, I think, is a good candidate for a bottom fish. Let's go through a few more charts. There's another cannabis name, Charlotte's Web, I believe, is a cannabis company as well. It's also breaking the downward trend line. I don't think it's as strong a chart as CRON, so if you were to pick one or the other, I would go with CRON. Let's see if we can find any more here. And these aren't all cannabis names, obviously. There's lots of other sectors being represented. There's your Ballard Power, which has gone absolutely parabolic. Incidentally, I featured this stock back in May, so it's been just a huge winner for my readers. Continuing along, we'll do one more page of these and see what we find. This particular scan found 53 candidates. I'm looking for the good ones. Here's an example of a stock that I highlighted to the readers of my daily newsletter, which is available at tradescores.com. And I highlighted it back there when it first broke out. That was around $20, $21. It's gone really quite well so far, up about 20% already. I think it's too late now, but just an example of the kind of thing we're looking for, which is that abnormal price break with abnormal volume from low volatility trading. And of course, those are the things that I teach in the education material at stockscores.com, and you can check into the website and see what's available there under the trader training menu. All right, Canopy Growth, this is another cannabis stock, which I think has a great looking turnaround chart. You can see the downward trend line broken. We're building rising bottoms and now breaking up through resistance from rising bottoms. Look at that volume starting to pick up. The stock is being accumulated. I think it's got perhaps a 70% chance of heading higher from here. All right, let's jump back into the presentation, take a look at the day trade of the week. And this week we're going to look at a very bizarre stock that I highlighted in the active live service on Stockscores on Friday morning. And again, the reason I did that, as you probably are tired of hearing if you do this every week, is it made an action candle right there, perhaps 10 minutes after the market opened. It gave us a second chance to buy it because it pulled back to the entry price, which was 183, and then it really went quite crazy to the upside. Some would say kind of parabolic. You can see how far it got above its upward trend line. Well, that's always a cue to be careful, and this one just evaporated in about 4 minutes. And so each one of these bars is 2 minutes, and in about 4 minutes it dropped almost the entire move to the upside. I don't know why, I don't really read news, but I imagine there was something bad that happened. And so if you didn't protect yourself with some kind of trailing stop or have some sort of stop loss in place, you really missed out on a nice profit. Now in this case, the economics were as follows. For $100 of risk, it required a position of 550 shares, which was about $1,000 in capital. Margin, not really able to margin this, so it ended up going up over 12 RR, reward for risk is RR, but it closed down 1.39. So that meant that if you were not keeping an eye on this thing and didn't get out when the market started to fall apart, you ended up with a $139 loss, or a 13.8% loss on the capital for that one-day hold. Now, the potential profit was about $1,250, although it would be pretty lucky to get out the highs. But even if you waited for that just initial shock when the market started to move down, it still was about a +8, which gave you $800 of profit for that $1,000 trade. Pretty good, but again, this one you had to be on the ball, because once it went parabolic, it got risky and it evaporated to the downside very, very quickly. All right, well, that has been the Stockscores Market Minutes for January 20th, 2020. It's a lot of 20s. Hope that you've enjoyed it. If so, click on the like button, leave a comment, tell your friends to subscribe. You should subscribe. Click on that subscribe button. Have a great week in the market and trade well.